Mukul, let me start by asking you, we've just taken our viewers through a whole host of the trends that shape 2024, IPOs being the big one. But to your mind, what would be the standout, trends, the big performers in the year gone by?
Sure. Shireen, first of all, thank you so much for having me on the show. And I want to start by congratulating you for completing 25 years of being a wonderful cheerleader for Indian businesses and startups. So thank you for that. Now, coming to your question, so if we look at this year, we have to step back and look at last 3-4 years together. So 2021 and early 22 was a period when we saw a lot of capital coming into the startup ecosystem. And then as the capital markets dried up, last 2.5 years have been years of efficiency. They have also been years which have really separated high quality companies from not so great companies. And therefore, this year we have seen a lot of questions about Indian startup ecosystem being answered in a very, very comprehensive manner. So one, we always used to hear questions on, hey, is the India market large enough or not? And we have seen a lot of categories in India have now become very large, whether it's $100 billion of Indian marketplaces, whether it is $10 billion of ad revenue, and I can go on and on. Second, we used to hear a lot of questions on, will these companies ever make money? So they make GMV, but will they ever be profitable? Again, we have seen a lot of companies become very clearly profitable and generating hundreds of millions of cash. And third were questions around exits, which you already covered in the introduction, that we have seen finally a lot of very strong exits and very attractive reception on public markets for these companies. So I would say this has been a coming of age year for Indian startup ecosystem, where finally they have moved from being startups to established businesses and will hopefully keep compounding from here for decades ahead.
But Mukul, let's talk about the kind of investments that you've made through 2024 and what we should now expect in 2025. I'm just taking a look at, your portfolio. You invested in more than 30 companies, totaling over $140 million just in 2024. These include both new investments as well as follow-ons. Take me through the bets that you have made in 2024, the investment thesis that will continue to drive your checks and where they head in 2025.
Sure, Shireen. So, see, for us, we have 3 core pillars at Elevation, and then there's a fourth which we have started building this year. So the first 3 core pillars are consumer, which includes consumer tech platforms like Swiggy, but it also includes consumer brands, where we've been early investors in companies like Country Delight, Bliss Club, etc. Second is fintech financial services. Third is SaaS plus AI, India building for the world. And the fourth, which we have very actively started building out this year, is healthcare. So these 4 will continue to be big focus areas for us going into the next year as well. And if we contrast Indian market with, let's say, rest of the world, where 80-90% of venture capital today is going into AI, our view is in India, where we are as an economy, there is a lot of headroom across all of these categories. And therefore, in India, both investment and returns will be much more broad-based and secular and not really limited to AI. And second, we also believe role of AI in India will be a lot more cross-cutting. So it can play a role in education, it can play a role in healthcare, it can play a role in financial services. And therefore, there will be multiple avenues versus only SaaS and B2B software for the world, which of course will remain a focus area as well. So this year, like you mentioned, we ended up investing in 30 companies, pretty much equally split between the first 3 and a little bit in healthcare. And my view is next year will be very similar for us as well.
Mukul, just build on that, the way that you're addressing AI and the middle layer, so to speak, if at all, in India.
Sure. So, Shireen, let me add a couple of points to what Anand said. See, one unique advantage we have in India is that some of the tech companies in India are probably largest in the world in terms of number of users and complexity they are handling. Swiggy would be a good example of that. IPO would be a good example of that. They have hundreds of millions of annual transacting customers. So it's bigger than even some of the US companies. And therefore, the kind of complexity that Indian developers, Indian engineers are handling is almost the best in class. And therefore, that's what is critical in this middle layer, where if you are building software which is managing security, which is managing stability, which is managing this complexity and middleware for these companies at scale, you can do it for rest of the world as well. So as we are getting into this AI era, the same will continue to happen from India. That is one. Second, we also feel if we draw a parallel to SaaS era over the last 15, 20 years, we were probably late to the game. SaaS companies in US started in late 90s, early 2000s, whereas Freshworks started in 2010, 2011. So we were almost a decade late. And we also did not have role models on how to sell software from India for the world at that time. But over the last 15 years, we have had those learnings, we have those role models, we have best-in-class talent as we spoke about. So as we also enter the AI application layer era, India will be much better prepared. And our view is we will see many more companies like a Freshworks, like a Browser Stack coming from India and building for the world and capturing meaningful share of that market. So we are very, very excited both about this middleware, which we spoke about, and also about the application layer AI companies getting built from India.
Anything in specific? Any companies that you're going to be watching out for, Mukul, whether they're part of your portfolio outside of it?
Sure. Actually, let me share a couple of examples with you. So one of the companies we had invested in their previous round, and coincidentally, Axel invested in that company this year. They are called NanoNets, and they are an AI first company. What they do is, before NanoNets, in a pre-AI era, document processing companies used to work on structured documents. Thanks to AI, NanoNets type technology can now work on unstructured documents. And then they are saying that if you are a company which has a lot of documents, which could be invoices, which could be purchase orders, etc., we'll not only help process them automatically, even if they look very different, but also we'll integrate into your workflow so that the entire workflow gets automated, right from, let's say, a company placing an order to the payment, the entire flow gets automated. So these are the kind of things which are becoming possible, which would have had tens of or hundreds of humans in a developing country manually going through those documents. So this is the kind of innovation we are seeing in the AI application layer now.
And let's address this issue of the addressable market. I mean, for a brand like Bliss Club, which you're invested in, what are we really talking about in terms of the kind of headroom for growth? I mean, the runway that you foresee from here on for some of these consumer brands now operating in India, because there are questions on the consumption power, on the discretionary spending power at this point in time.
So, Shireen, I think those are all the right questions if we think of here and now. And as you know better than anyone else, if we look at India from a 10-year lens, that's when you get to see how much progress is really happening. And if we go 10 years back, I don't think anyone would have imagined we'll have 1,000 crore plus new age consumer brands getting built in less than a decade, which we are already starting to see. In fact, even till 3-4 years back, consumer brands was not even considered a venture capital investable business, because people would feel, hey, will they grow large, big enough? Is there enough TAM or not? Now, if we look at where we are sitting today, nearing in $2,500-3,000 per capita income, and 10 years out, it could be 2.5x of where we are today. So we'll be at $6,000-8,000 per capita income. At these levels, discretionary income starts to grow much faster than the rate of GDP growth. And therefore, we believe in a lot of these categories. Bliss Club is right there where consumers are premiumizing. They are looking for best in the world products. So if a consumer in India who wants athleisure, they are looking at a US market and saying that, hey, my friends in the US have access to brands like Lululemon, which, by the way, their products start at $100. So I have the same aspiration. I want the same quality. I'm willing to pay up by Indian standards. So I will not buy a $100 product, but if Bliss Club can give me similar product for 1,000, 1,500 rupees, is there demand for that? And we have been very, very surprised. So we had done seed investment in Bliss Club in early 2021, mid 2021. So it's been almost 3 years since that investment, and they are nearing 200 crore annualized revenue run rate and very close to profitability. Again, this goes to show that if you have a very differentiated, high quality product at the right price, and in India, all of these are important. You can't have quality but very expensive. You can't have cheap but poor quality. You have to find the right balance. But if you find it, the TAM is very, very large. And we will continue to be positively surprised over the next decade as well with the kind of TAM or revenue scale some of these companies will achieve.
Well, yes, Bliss Club walking away with the Breakout Brand of the Year at the CNBC-TV18 India Business Leader Awards over the weekend. But Mukul, let's talk about some of the risks. We're talking about the opportunities as well as the headroom for growth. But what would you qualify as the risk that we should be mindful of as we enter 2025?
Sure. So, see, the biggest opportunity and the biggest risk, and at the risk of repetition, we have already spoken about it, is this whole AI shift which is happening. And if I had to say what is one thing I wish I had seen more of in this year, I would say it was global best-in-class AI companies coming out of India. We spoke about that middle layer, we spoke about the application layer. We are starting to see some of that, but nowhere close to the same scale as what is happening in the rest of the world. So there we cannot, as a country, get left behind. There, I think we have to be much more bolder, much more ambitious, and say that, hey, over the next 5, 7, 10 years, how do we make sure we have best-in-class global AI companies being built out of India? And today we have the talent, we have the capital, we have the market access. So that, in my view, is the biggest opportunity and biggest risk if we miss out on it. So next 12, 24 months will be crucial for that.
Yes, certainly will be crucial for that. But one of the other interesting trends that we've seen pick up pace through 2024 is the emergence of family offices and domestic capital venturing into Indian startups. Now, what does that mean as far as the startup ecosystem is concerned, both in terms of the kinds of companies that are likely to be funded, as well as the valuations that we're expected to see?
And if we look at total tech market cap, public and private in India put together, and I'm just looking at new age companies, it will probably be in that $300, $400 billion sort of zone. And over next decade, it is going to multiply manyfold. And so far, participants in this value creation obviously have been domestic investors, but it has also been a lot of foreign capital as well. And as we look at next 10 years, obviously, as this value creation happens, we should see more and more domestic capital participating in this. HNIs is one part of it. Is there even room for, like, globally, lot of endowment funds, lot of universities, lot of fund of funds are participating in this asset class? Why should domestic capital miss out on this opportunity? So we would love to see much more domestic participation in this hundreds of dollars of value creation, which is hundreds of billions of dollars of value creation, which is going to happen over the next decade or so.
Well, speaking of value creation, 2024, as we pointed out, has been a big year as far as new age company IPOs are concerned. Mukul, let me start by asking you, 2025, there's a long list, a long pipeline that is looking to head to the Lal Street. What's the expectation? Do you believe, given the fact that we are in a volatile market at this point in time with many global events, including the Trump administration taking office in January, that could potentially impact the way that the markets move? What's the outlook as far as the IPO pipeline itself is concerned?
Sure. So see, from our perspective and from the company's lens, what we can control is our own performance. And the good news is, like you said, there is a long list of companies which are growing well, which have become profitable, which also know that they are now mature enough to go public and have a predictable business trajectory. So that is what is in our control. And it's great to see that now tens of Indian companies are getting into that bucket. Now, next year, like you said, there are a lot of domestic as well as global variables basis, which we'll know how long does this IPO window remain open. And therefore, we'll have to wait and see how many of these companies can actually list. But even if some of them cannot next year, it's perfectly fine because they are resilient businesses. They'll keep compounding. And whenever the opportunity and timing is right, they can always come back to the market at that time.